Let this sink in for a moment. The lack of financial education cost Americans $450 billion in 2021. 78% of American homeowners are living paycheck to paycheck. And right now, most American homeowners are equity rich and cash poor. That's another word for broke. The media isn't helping you, schools aren't helping you, and the government for sure isn't going to save you. As a top 1% mortgage professional and seasoned investor, I cannot sit around and watch these life-changing skills that I've learned outside of traditional schooling be unused, untaught, and thrown in the trash can. So until these statistics change, I'll be here every single week, preaching and teaching personal and professional finance, information that you can use in your life, however that looks, whether you are 16 or 60. Hey friends, welcome back to another Happy Homeowner podcast episode. I created this podcast about 2 years ago for my clients, for the clients that I've helped, and then for existing clients that I'm in the process of helping. This year has been spectacular, where every week I bring in a top real estate agent in the local communities. And what we do is we talk about different market stats, and we talk about, is the market a buyer's market or a seller's market, median home values, are they up or down month over month, up or down year over year? And then I talk about, in each one of these communities, based off of the median sales price, income-wise, what it looks like, how much do you need to earn to live in these areas? And so I feel like we've been getting great feedback. This week, we're going to take a break from interviewing real estate agents. Not that I'm burned out or tired of them. I love my real estate agents, but I wanted to switch things up just a little. We are in September of 2025. Every single client I talk with, whether I'm refinancing a client that I helped 2 or 3 years ago at 7.5% or 8%, or I'm talking to home buyers, whether they're first time or they're move up or step down home buyers, I'm having the same conversation around the economy, around cycles. And so what I wanted to do is I wanted to share a little bit of information today. Today we're going to be shorter than usual. Some information that I gained last week from sitting in on an economic symposium where I got to listen to some of the top economists in America talk about the current state of the housing and real estate mortgage markets and the future, 2026. If you look at headlines right now, you're going to see headlines that we're in the worst real estate market since 2018, worst housing statistics in 40 years, least amount of homes sold in 40 years. What was the one that I saw today that was super misleading? 68% of listings are being delisted, meaning homeowners are taking their homes off the market. This stuff is crazy. If you focus on the negative, you're going to start believing I don't want to say it's fake news. It's not really fake news. It's news, but it's not newsworthy because based off of the economic data that I'm going to share with you right now, 2024, 2025, we're averaging about 4.2 to 4.5 million homes sold a year. Now, prior to the 2020 housing boom, so let's just say 2019 and before, we averaged about 6 million homes sold per year in the United States of America. So yes, a little bit more. There are less homes being sold today than prior to 2020. But here's what I want to share. And this is what my clients need to know. My clients, I'm having this conversation with all of them right now. If you look at today, right now, 2025, there's 18 million potential home buyers in the market. People over the age of 21, people that could buy homes. Now, set that number off to the side because that's a big number, 18 million. I think the news might cover that. I'm going to actually give you the facts. Yes, even though there's 18 million more people in America than there was prior to 2020, you have to look at the home ownership rate in America. You can chat GPT that, you can Google that. It's about 60%. It's been as low as 55% back in the 80s and the 70s. It's been as high as I think 63-ish%. We're at about 60%. So 60% of 18 million, let's just say is about 11 million. So there's potentially 11 million home buyers that are on the sidelines that are entering the market than there were in 2019. but there's only about 1 million to 1.5 million less homes being sold. That has a recipe for a complete, like this could get absolutely insane in the next year as you continue to see the Fed drop the Fed rate. Remember, mortgage rates don't move directly with the Fed rate. They move indirectly with the Fed rate. So we're already starting to see mortgage rates drop with just talks of the Fed lowering the Fed rate in September and into 2026. So if you take this data, this is information that will help you better understand cycles and patterns in real estate, which is super helpful if you're a seller or if you're a homeowner or if you're a buyer. So I'm having this conversation with everyone right now. The other thing that I'm talking with a lot of people about right now is the idea of buying a home and home ownership needs to be tied into both your short-term and your long-term financial plan. And so my question to you is it? Are you thinking of it that way? And the only reason why I say this, if you bought, for example, a $600,000 home in 2018, there's a good chance today in 2025 that $600,000 home is knocking on the door of being worth $1 million. Okay, so in less than 10 years, you made, let's say, $500,000 in appreciation. That's real money that you can use. There are some bills there's a bill on the floor right now, I think it's the Senate floor, where it's going to potentially remove capital gains. If that passes, you're going to see a lot of sellers wanting to sell to tap into a lot of their hard-earned equity over the last 10, 15, 20 years. And so you have to look at it this way, that your home average appreciation rates over the last 40 years are right around 7%, maybe a little bit more, maybe a little bit less, but up in the Puget Sound, Pacific Northwest, right around 7 to 9%. If you were to purchase a $700,000 home and it goes up 7% in value, that's $50,000 a year in appreciation. At the same time, you're paying down your mortgage. At the same time, you're getting tax incentives or tax refunds against mortgage interest and property taxes. And so there's a big financial benefit of home ownership. Yes, are there costs? And I do not want to sugarcoat that. There are costs of owning a home. You have to pay mortgage. You have to pay taxes. You have to insure the home. You have to keep the home and maintain the home. There's some upkeep. The other thing, the rule that I give my clients, it's called the 1% rule. So if your home's worth $700,000, you should have 1% of $700,000 a year put away for maintenance, okay? For just general wear and tear, a rainy day fund, if you will. So when we're talking about home ownership right now with all of my clients, I'm talking about zooming out. Let's zoom out 10 years. Where do you see yourself? Let's two things. I talk about your market and the market. Let's have a conversation about both of those, zooming out 10 years. What will the market do in the next 10 years? And what does your market look like in the next 10 years? Okay. Will you be fully funding your 401k each year? Will you be debt free? Will you need to be maybe taking out some money out of your equity or student loans for one of your kids? There's a lot of things that we talk about because I believe your mortgage can and will be tied into your short-term and long-term financial plans. Been in the mortgage industry now for 18 years. I have seen this with nearly every single client that I've helped. Okay, so either my clients have refinanced, which we've saved them money, they've refinanced, which they've pulled money out to reinvest, or they've sold and they've taken those profits and rolled it into another home or done something great with that. So your mortgage, your real estate is a part of your financial plan, and I wanted to start off by at least planting that seed, which brings me to the topic of today's podcast. And I put some thought into this. Did I chat GPT? I helped create the hook using chat GPT, but all of the 5 things that I'm going to talk about today, you're not going to find on chat GPT. Number 2, these are things that 18 years experience in the mortgage industry, working with thousands of home buyers and homeowners that I've learned. And what I wanted to do today is I wanted to talk about some wealth hacks for homeowners, specifically like, how do you build wealth while owning a home? What are some things you can do with your finances, things you can do to your home that help increase maybe what you would sell the home for, or increase the appreciation rate at a higher percent, or increase your wealth while owning the home? So Number one, let's talk about upgrades. So I see a lot of clients calling me and they're asking for referrals to roofers, to contractors, to landscapers, home improvements. Obviously, look at Home Depot and Lowe's. These are publicly traded companies. They sell billions and billions of dollars of product a year. It's a big industry. So what are the top 3 upgrades that will give you the greatest ROI on owning your home? So number one, you probably already know this, it's a kitchen refresh. So sticking with a budget and living within your means relative to your kitchen is one thing. Going crazy is another thing. So that is the number one by far. Kitchen upgrades. I've seen it personally. We've done that. Number 2, in 2025, it's super trendy, but it's making your home more energy efficient. In fact, my wife and I are doing this right now. We're replacing the windows, all of the windows in our home. So making your home more energy efficient. That's windows. That could be different appliances that save you money. That could be making sure that you have a contractor come out and checking all your doors and your sliders and make sure that they're keeping the air out and cool air or warm air in. All right. And then the third one is curb appeal. Landscaping and curb appeal. Those are the 3 big things that add the quickest and most robust forms of ROI relative to home ownership. So I like to talk about other things too that go back to the energy efficient. Don't overlook insulation, crawl space, roof, HVAC systems, stuff like that. A lot of the times those can be costly up front, but they can save you hundreds and thousands of dollars over the life of home ownership. So the second thing, which I spent a ton of time on, and I created a page. I'm so passionate about this. In fact, I created a page called budgetwithdan.com. It's free. You don't have to put in your email. I don't know when you go there. Everything there is downloadable in a PDF form or an Excel form. It's yours. I created this for my clients, particularly because as I got in the mortgage industry back in 2008, I was really helping people. You know, when you start out in an industry, you kind of start down at the bottom. So I was helping first-time home buyers. Well, I didn't just help first-time home buyers buy a home. I helped them plan for their financial future. I got them into a mortgage, but I wanted to give them financial education, if you will. So if they needed credit repair or to improve their credit score, I'd try to teach them how to do that. I created a blog, and then social media came about. 2014, I created budgetwithdan.com. And this is a resource page that I give all my clients. I teach the 6 steps to wealth, something that I learned young in my mortgage career, and I have followed it. My wife and I have followed the 6 steps to wealth principles our second half of our entire married life. Over the last, 2014? So 11, 12 years, it works. I'm living proof of that. I teach it. I teach it to anyone that'll listen. Budgetwithdan.com, 6 steps to wealth, number 1. Number 2, everyone comes to me when they're trying to buy a home and they're like, well, we're trying to budget for our monthly payment. So I read on the internet that our total monthly payment should be 30% of our income. And then the question is, well, is that your gross income or is that your net income? Is that what you're depositing? Is that what your gross is? And there's no right answer to that. What I tell all my clients, there's no formula for what you should spend for a monthly payment, because here's the thing. Let's say you're debt-free. Let's say you're investing in your 401k. You're maxing out your 401k. And let's say you spend your money wisely and you invest a little bit into the S&P 500 index, for example, or crypto. You're taking care of your future self. You could max out your monthly budget. You could go a lot higher than someone that has a poor credit score, a lot of debt, is not putting down a lot of money, is not investing in their 401k, and has no money set aside for their retirement in investment accounts. And so the advice that I give, and this is key, I see so many lenders and so many realtors going, you should not pay more than 31% of your monthly income. And I was like, that's silly. Like, talk about like cookie cutter advice. That's not great advice. That advice should be, like I give to everyone, custom to everyone's certain situation and financial situation, okay? So going back to budgetwithdan.com, 6 steps to wealth. I give you budgeting information for you to self-discover how much you should be paying each month for your mortgage payment. That helps me customize your mortgage versus me just saying, hey, based off your income, based off of your debt, based off of your credit score, you qualify for X. Okay. So you'll find information there. And then the most valuable thing you'll find at budgetwithdan.com is my annual wealth test. 15 questions. I take it twice a year. The whole idea here is that you take a no and try to turn every no into a yes. Sometimes it'll take you 6 months to 6 years to turn a no into a yes. But long story short, it at least gives you a roadmap to retiring financially free or well off. My annual wealth test, gold. I absolutely love it. It's all there for you for free. And then there's some other resources there that you can learn how to be a little bit more financially literate. And I provide just a ton of information that you can share with any of your family members or friends as well. Budgetwithdan.com. All right. So the second thing I wanted to talk about, the number one greatest ROI on homeownership in regards to upgrades. Number two is developing a debt paydown strategy, which ties into budgetwithdan.com, but specifically a debt paydown strategy. You need to go and audit your credit card statement and your bank statements. And what you're going to do is you're going to highlight each line item that is not a necessity. Okay. What you're going to do from there is you're going to work every single month to minimize or reduce the non-necessary expenses. That's going to help you pay down debt. That's going to free up more money every single month. You're going to say, hey, I'm spending a lot of money at Starbucks, or hey, boy, I eat at a fast food restaurant 6 times a week. Well, maybe cut back on that a little, especially if you have debt. So a debt pay down strategy will help you take a 22% credit card rate, for example. And if you can eliminate that, you just got a 22% return on your income if you think about it the right way. The other thing too is if you are a homeowner and you have debt, or you have kids that are going off to college and student loan debt could be high, you could take a home equity line of credit and use that to pay down high interest credit card debt or high interest student loans, or even a high auto or truck payment. All right. So reevaluating your debt and having a strategy around that. If you have any questions, I want you to reach out to me. Now, the third thing, I'm participating in this right now. So another wealth hack. This is my third wealth hack for homeowners. If you live in certain areas where they've adjusted the zoning recently and allowed you to build an ADU on your property up to, I think, 1,200 square feet in certain areas, I'm building 2 of these right now. And they look like just normal homes. They're about 1,000 square feet, 3 bedrooms, 2 bath, garage, everything. You can rent those out, or you can condoize them and sell those off. And that's a way to make money. If I'm a homeowner, I'm really not looking to subdivide or condoize those. What I'm looking to do is build one of those and rent that out and create additional revenue each month. And that will add value to your property down the road. So ADUs or house hacking is the third way where you can wealth hack as a homeowner. All right. So number 4, and this one's really important. Right now, our industry is being challenged severely by the insurance industry. So being able to look at your current insurance situation on your auto, your home, and your life is really, really important. This is where I want you to reach out to me if you need an updated homeowner insurance review or a consultation. I'd be happy to make an introduction there to make sure homeowners premiums, homeowners insurance and auto insurance premiums have gone through the roof in the last year. The insurance industry is going through a lot of issues right now, and you may be overpaying. And that's a way where you can wealth hack as a homeowner, is making sure on certain things like that you're getting charged what you should be charged versus what they want to charge you just because they can. Now, the fifth and last one kind of ties into the ADU, but this is where I talk about using your equity as a wealth lever. And what I mean by that is taking money out of your equity to go buy an investment home. Maybe taking some money out of your equity to go invest it, for example, in the stock market. I see this a lot with my clients where they're taking money out of their equity and going and duplicating that in real estate. So whether it be purchasing an investment home, leveraging that to go maybe build a home, or go and purchase another home to occupy. So that's another thing that I'm seeing right now. These are the top 5 wealth hacks that I teach my clients, that I'm seeing my clients do. And me personally, I've been investing in real estate for over 25 years. And these are things that are on top of my radar all the time so that I can add wealth to my hard-earned dollars that we make. So if you have any questions, I want you to reach out. I hope you found this valuable. I've got a couple of really great episodes coming up where we're featuring the city of Everett and all the great things that are happening. We've got the mayor coming in. We've got a couple of top real estate agents in the Everett market that are going to talk with us about some of the really cool things that are happening here and why people are relocating to Everett. If you have any questions on real estate or mortgage related information, I'd love to be a resource. Thank you if you took 20 minutes to listen to me today. I'm always here if you need me. We'll see you next time on the Happy Homeowner Podcast. Bye for now.